Then let's shift away from the market conversation and interact with our first management of the day. Venkatraman Narayanan, the MD and CFO at Happiest Minds Technology, joins us. Mr. Narayanan, good morning. Thanks so much for joining us on the show. Give us a sense of what the second half is expected to shape up like for your company. What are you expecting the trends to be like heading into the next year? Because your constant currency revenue is up 23% year on year in the first half. Do you believe the second half could match this or perhaps even surpass this growth that you've seen in constant currency?
We are trying to, meet those numbers. The guidance or the forecast that we've given on our revenue growth is about 30 to 35% in revenue growth in constant currency. We are 23% at the half year mark. Like I've said earlier, our first initial work that's cut out for us is to meet the lower end of that forecast. We'll report on that after the end of this quarter, and we'll see how to update you on that. But that said, on the overall business environment, the second half is definitely looking better than the first half in terms of market spends and the way our customers are beginning to start on new projects. But we'll have to wait. There is a change in the US presidency, which will happen from January 20th. We have also got the budget season for most of our customers. We are in discussions with them. We'll try to factor in all of that and come back with a more favorable or whatever that answer is at the end of this quarter or more into this third and fourth quarter.
Right. Very good morning to you, Mr. Narayanan. This is Cheryl also joining in the conversation. I just wanted to get some insight when you talk about the BFSI spend. Because by the end of the year, or by the end of this calendar year, that's 2024, we've actually seen a bit of a recovery when you talk about the BFSI spends. Which other sectoral trends are you actually watching out when you talk about 2025, or at least for the end of this financial year then?
Yeah, so BFSI obviously, a lot of about it has been written and discussed. So we are beginning to see green shoots. It is now the largest vertical for us. Followed by, EduTech is another significant vertical for us. There were some sort of action that was beginning to start. We were starting to see because there was still government spends affecting education from up to K-12. That slowly now is settling in. But with the new government, we'll get to see what's the order of preference for them in terms of investment from education. So that's something that we'll be following. Healthcare is doing or beginning to do well, and we are also there. It's our third largest vertical, so we are looking at green shoots there. Other than these three, retail and CPG has had a couple of flat years, but slowly spends are coming in. It's largely driven by domestic spend. That should happen with tax cuts and more money pumped into the economy. You should see that happening. I'm talking about the US's economy here, not about the Indian part. So we'll start seeing some bit of technology upgrades on the retail CPG segment. The interesting segments are high tech. High tech is there was an element of overspend over the last couple of years, but that's now beginning to plateau, and you are seeing a lot of investment. If you see the last year, most of the high tech spend was on the AI part. Largely big companies were investing into tools and technologies to ride that wave. That's slowly now starting to percolate into the business, and that's where we are also seeing opportunities. And manufacturing as a sector, production manufacturing, that's beginning to show improvement with capital formation beginning to happen. We will see uptake there as well. So in all, we are looking at green shoots in BFSI, better days ahead into healthcare, EduTech, stability, and the other two, we are largely going to see, I would think, a slow turnaround as we get into the next year.
So that's the levers on which you're expecting to grow going ahead. Mr. Narayan, also give us your outlook on inorganic growth and what that's going to look like into 2025, because inorganic growth has been an important lever for you as we head into the next year. Should we expect any more acquisitions? Could you give us a little sneak peek on if anything is active in the pipeline right now? Is any acquisition on the cards? Are you in talks with somebody? Could you give us a sense of all of that on the inorganic growth front?
The corporate development team and all of us are consistently on the lookout for companies to, take on happiest minds, both from a competency standpoint or which can strengthen our verticals. Last quarter, the first quarter of this year, we had closed a couple of acquisitions, the big one being Pure Software and then Aureus. But these things take time. So as of now, we are in the evaluation stage of a couple of opportunities. I'm hopeful that we will be in a place to, point in time to disclose that in a couple of quarters. But right now, the order of priority is to integrate, do that upsell, cross-sell that we've been talking about of the acquired entities, and then take the next step of growth. But we continuously are on the lookout for, capabilities, competencies, vertical additions that we have, strength additions, almost on a daily basis. So we do have names, and our pipeline is looking decent, I should say.
I'm unsure if you could share any of those names with us right now, given the fact that you're still in the talking terms with them. Yeah.
No, we are bound by our own non-disclosure agreements,
Yes.
and as a listed company, I can only disclose as much. But closer to the event, we'll be happy to.
The takeaway from that is that you are in constant lookout. You are in talks with some more for an acquisition, right? Is that what we can take away from that?
Yeah, multiple discussions. It's almost like a sales process. It's like a sales process, so you keep your pipeline going and you're in discussion.
Right. So let me talk about then the recent acquisition. Since you cannot disclose the name, though we've got that headline that you are in talks with a couple of companies, but your recent acquisitions, when you talk about Pure Software or Aureus, if you could tell us how they're scaling up, how have the revenues and the margins been working out for these companies? Is it on track or something that you envisage?
See, just to give the numbers, last year they ended at about $41.4 million was what Pure Software ended the year with. I'm talking about FY24. Aureus was about close to $8 million. And this is what we have disclosed as well in our filings. Going into the current year, we have consolidated both companies effective middle of quarter one. So now effectively they are part of Happiest Minds. We are growing together. And as I've been saying almost always in my, to my analyst friends and to the media, we are now working together. We don't segregate the growth that we look at as organic, inorganic. The starting point is what I gave. And from there, there is so much of cross-selling and upselling happening. I can't mention all the customers that we have added from Happiest, from Pure Software. We are selling into them. We are taking generative AI. We are taking security solutions. We are taking analytics, platform build capabilities into them. They had a very nice BFSI practice and, high tech and healthcare practice. Those three verticals are nicely integrated with our verticals. And as we have mentioned, we had verticalized last year. So that, merger of verticals has happened nicely. And we are growing nicely into those verticals by doing a lot of cross-sell and upsell of capabilities and competencies. Per contra, there was this banking as a software platform, Artha Banking, that came into the Happiest Minds, fold from Pure Software. It's a nice core banking solution, which is completely SaaS-enabled, multi-tenanted platform. And they're doing very well in Southeast Asia and Africa. The priority for us is to see how we can, tweak that to meet Indian requirements and also to take it to the US. We've got 42 salespeople. They have got 8 to 10 sales guys. They're all working together to see how we can tackle the larger markets of, India and US for the software platform that we're talking about. It's an award-winning platform, and we are making investments to take it, develop connectors and taking into these new markets.
All of that sounds very optimistic going ahead, Mr. Narayanan. It's sure sounding to be a good start to 2025 for you. But on that note, also talk to us in terms of numbers when it comes to margins. Are you still aiming for that 20 to 22% margin that you were talking about earlier, or do you believe that you can revisit that margin guidance and maybe hike it slightly?
Yeah, 20 to 22 is the range that I've given as a forecast for the current year. As of end of first half, we have slightly done better than that number. The hope and the attempt will be to meet that range for the year for sure. And as I've been again saying, the focus will also be to improve on them. There are some puts and takes in this. The puts are obviously, the investment that we're making in generative AI, that's a takeout of, margins. There is also the new sales engine that we have put in place. We have hired a chief growth officer. He's putting in a reasonably large size team to support the new growth engine for US and India, the two largest markets that we are in. So that's an investment. The third point that we have been talking about is we have been giving, compensation increases in line with the typical timelines that we have maintained. Because we believe that's also an investment into the fundamental future of the company. Now that said, going forward, we are going to, I'm sure, see benefits coming out from the Gen AI investments, from the new sales engine. Obviously, people, we're talking about the core of the company. On top of this, we'll also be making investments into the Artha banking platform as we go forward in the build for the US and the India markets. India markets for sure to start with. So while we'll see returns coming in from the Gen AI business and the new, we'll also start seeing upsides from the Artha banking, but that will be maybe it'll take a little bit of a time for that to fructify. So with all this in mind, these are the puts. The takes are obviously, the foreign currency, the way Indian rupee is shaping up against the dollar. We will surely get some benefit out of that. And part of that will be applied to the investments that I talked about, and part of that will be reported to the markets as profits. So in short, 20 to 22% hold on to it, improve on it over the medium term, and obviously the long term will be to make sure that we are back. We are trying to get back to the 22 to 24% kind of a number.
We wish you all the best for that, Mr. Narayanan. Thank you so much for joining us in ET Now. All the best for your company, and wish you a very happy new year, as well as to the entire team at Happiest Mind. Hope you have a brighter and a most prosperous year 2025. But let's move on.
That was very...
Thank you so much for that. But let's take a look at the markets and what they're doing at this point in time, given the fact that